Hello, everyone. I'm Katie Talati, Director of Research at Arca. Welcome to this week's edition of What's Driving Token Prices. Here at Arca, I'm responsible for analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price shifts. Based on our research and market events over the past week, we wanted to share with you some of our notable insights and token price movements and what we think drove these moves. As a reminder, before we get started, guys, this is commentary. It is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys, it has been 2 weeks since we caught up. I'm so sorry for the gap, but if you didn't check it out, Arca had a wonderful conference. I believe some of the videos of panels will be available for the public soon. The last 2 weeks have definitely been interesting. We've seen a lot of market correction, mostly driven by the Luna UST, happenings of the past 2.5, 3 weeks. If you guys want to catch up on that, definitely watch last week's episode, because I did talk about that a lot. And there's obviously been a lot of media coverage about it. So if you're interested in learning exactly what happened, I dug into it 2 weeks ago. And so that's been kind of mainly what has driven down the market, along with broader macro picture. Despite that, we're seeing some interesting moves and some interesting happenings, although things have definitely been more on the muted side. Okay, so we're going to get started this week with Phantom. So Phantom, it's a layer 1 blockchain. They actually announced that they would launch their own algorithmic stablecoin, which I know everybody here is like, let's not do that. But they're actually modeling it after MakerDAO's stablecoin. Anyway, the MakerDAO stablecoin model, if you're not familiar, is basically people deposit assets into MakerDAO vaults, and in return they get DAI, or the stablecoin that is pegged to the pegged 1-to-1 with USD. Kind of in this model, what happens is that you end up having over collateralized loans just because of the nature of crypto. If there's a violent price move down or up, you want to make sure that there is still a loan to value ratio that is acceptable. MakerDAO's model has actually been pretty resilient throughout a lot of the downturns, including one that happened a couple years ago, March 2020, Black Thursday. I think that it's positive to see that Phantom is adopting this model. So based on this model, users can borrow FUSD, which will be the Phantom stablecoin, against various forms of collateral, including staked Phantom, which is great because it means that users can then use assets that are being productive in one place in a second place. Phantom is up 23% on the week on this news. All right, next up we have Uniswap. So Uniswap is a decentralized exchange launched on Ethereum. They actually hit a huge milestone this week, reaching $1 trillion in cumulative trading volume. That is massive. So the exchange, which launched in 2018, has been a staple of DeFi infrastructure, allowing token swaps for most ERC20 assets. Uniswap has been a leader in the decentralized exchange volume. They have 50% of cross-chain market share. And, although volumes for the DEX have recently fallen along with the whole industry, they're down about 55% from their peak in November. Really great to see this milestone from Uniswap. They're up 11% on the week. All right, now we get into some juicy news. We have Merit Circle. So Merit Circle is a gaming guild, pretty similar in model to Yield Guild games, if you're familiar with it. The idea with guilds in gaming is that a lot of in-game assets you need to start playing a lot of blockchain-based games with are kind of expensive. And so they loan out assets to new players. And in return, they essentially get a revenue split of whatever the player earns. This has been a pretty popular model in the last year, and it's gained a lot of traction. So Merit Circle was pretty early to the game with getting their guild up and running. They released what I would literally consider a scathing governance post this past week, proposing to cancel and refund a seed investment from one of their early investors, YGG, which is another gaming guild, as I mentioned. So the post actually details involvement from other seed investors and the positive impact they've had, while also describing the lack of strategic help that YGG provided Merit Circle. And Merit Circle actually saw very muted price action on this news, up 5%. YGG traded up 20% on this, which is very surprising. So there's active discussion in the governance forum about this. It'll definitely be interesting to see how it shakes out. And it obviously is, unearthing a lot of, folks in the community who aren't happy with this partnership and arrangement. All right, last but not least this week, we have Frax Share. So Frax is an algorithmic stablecoin, and they're designed very differently than Luna and MakerDAO. But in the last week, they basically saw a run on their treasury following the unwind of Terra. The stablecoin Frax maintained its peg after a $1.2 billion or 50% bank run. And then, which is really great to see in terms of resiliency. I think a lot of people started to take a run at certain stablecoins, algorithmic or not, in the last couple of weeks. We saw a lot of like Tether rumors floating around and it depegging here and there, and a lot of people trying to sell their Tether for other stablecoins such as USDC, considering it was like a safer asset. So really interesting to see that, it looks like people took a run at this or tried to withdraw and were feeling nervous, and the system still managed to hold up. Frax actually made an estimated $1.7 million last week, which equates to an $87 million annualized run rate. So despite this bank run, token is flat week over week. Very positive to see this. All right, guys, that's all I have for you this week. Thanks for joining. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.